The dollar's dramatic fall after weak jobs data reveals U.S. economy's true state. The shocking truth behind America's economic facade. Why the dollar is crumbling. Hold on to your financial hats, because the U.S. economy just revealed its most vulnerable underbelly, and investors are running for cover. The mighty dollar, once considered an unshakable global powerhouse, is experiencing a dramatic free fall that's sending shockwaves through international markets. But here's where it gets controversial. What seemed like a robust economic narrative has been dramatically unraveled by the Bureau of Labor Statistics' latest jobs report. The numbers don't just suggest weakness, they scream economic fragility. Throughout 2024, the U.S. dollar has been on a roller coaster ride, shedding nearly 9% of its value against the DXY currency index. Investors have been steadily losing confidence, driven away by complex trade policies and mounting economic uncertainties. While the dollar had been showing signs of recovery in recent weeks, Friday's jobs data delivered a knockout punch that completely derailed its momentum. The dramatic downturn was swift and significant. The dollar index plummeted from 100.22 to 98.82. U.S. dollar rebounds after slump as Fed cut projections rise. Following a significant dip on Friday, the U.S. dollar experienced a slight recovery on Monday, amidst looming expectations of Federal Reserve rate cuts. The greenback stumble came after a series of market-shaking events on Friday, which included a lackluster U.S. jobs report, the departure of a Federal Reserve governor, and President Donald Trump's dismissal of a key statistics official. These incidents fueled concerns over the strength of the U.S. economy and the independence of the Federal Reserve. Investors have raised their bets on impending Fed rate cuts, with the odds of a September reduction now exceeding 80%. The weak jobs data and uncertainty regarding the Fed's autonomy have weighed heavily on the U.S. currency. The dollar's rally in July hit a roadblock last week. Yet there's no indication of a substantial increase in the risk premium for holding U.S. assets, noted Carl Shimada, chief market strategist at Corpay in Toronto. Strong corporate earnings continue to overshadow fears of a potential slowdown in labor markets, the impact of higher tariffs, threats to the independence of U.S. statistical agencies, and the growing likelihood of a dovish shift in monetary policy under the next Fed chair. With the market's focus likely to pivot on President Trump's upcoming appointments to head the Bureau of Labor Statistics and join the Federal Reserve, traders are adopting a wait-and-see approach. Demand for safe haven currencies remains stable, and inflows into U.S. financial markets persist. Trump's dismissal of Bureau of Labor Statistics Commissioner Erica McIntyre on Friday, citing allegations of fabricated jobs numbers, added to the turmoil. Additionally, the unexpected resignation of Fed Governor Adriana Kugler opened the door for Trump to exert influence on the central bank earlier than expected. Trump has been critical of the Fed for not lowering interest rates sooner. On Friday, the dollar plummeted more than 2% against the yen and approximately 1.5% against the euro. By Monday, the greenback had stabilized, trading flat against the yen. The euro dipped slightly to 1.1562, while sterling held steady at 1.3281. Trump announced plans to reveal candidates for the vacant Fed position and the new head of the Bureau of Labor Statistics within the next few days. Against a basket of currencies, the dollar gained 0.2% to 98.82, recovering from a 1.3% drop on Friday. The dollar surged 3.4% in July, marking its largest monthly gain since a 5% leap in April 2022, as markets grew more comfortable with Trump's trade policies and economic data remained robust despite the impact of tariffs. Treasury yields dropped as bets on a Fed cut escalated. The policy-sensitive 2-year Treasury yield reached a 3-month low of 3.659% on Monday, reflecting heightened expectations of a September rate cut. The benchmark 10-year yield hovered near a 1-month low at 4.2257%. Markets now predict an 84% probability of a quarter-point rate reduction next month due to the disappointing jobs data. By December, nearly 60 basis points worth of cuts are anticipated, implying 2 25 basis point reductions and a 40% chance of a third. The Swiss franc took a hit as the dollar strengthened over 0.6% against it, following Trump's imposition of high tariffs on Switzerland as part of his global trade reset. The euro gained 0.4% against the Swiss franc, reaching 0.9351 franc. According to Danske Bank's Al Saraf, if these tariffs remain in place, they could significantly harm the Swiss economy.